Guys, big day in the market today. The NASDAQ finished down 2.04%. The Dow 1.5%. The S&P a little over 1.5%. Mo, what is going on out there? Tesla was up 12 billion percent yesterday. Today it was down over 5%. Things are very volatile, aren't they, out there?
Yeah. Actually, it's funny. You know the bank that we talked about yesterday? Was it Republic First?
Yeah, Republic First, not to be confused with First Republic that failed last year.
Somebody texted me yesterday and they go, has anybody been talking about this? I'm like, I don't think so.
No, because the government backstopped all these short-term treasuries or long-term treasuries, so people don't care. Guys,
a lot of stuff going on.
A lot going on. Remember, most of it's noise that causes people to overreact. On this channel for Everything Money, this is the 24/7 channel. If you like news, if you like quick response to the news, it is currently 4:04 p.m. I'm pretty sure by 5 p.m. this video will be out Eastern time. Subscribe to the channel. We're here to do 4 or 5 videos a day. We did one this morning already. Markets tanked. We're doing another video. This is where you come for market recaps. The market. Let's see some of the big names out there. Let's check out Apple. So what did Apple do today, Mo? Apple was down 1.83% to 170. So it's been hovering there.
After being up 2.5% yesterday.
And Mo, our esteemed colleague here, is an a-hole. His basis in Apple is $17 a share. So he still has a 10x, 10-bagger on Apple. Nice job, Mo. Very, very jealous of you. Let's check out that Tesla. Tesla was down 5.5% to 183, down a little bit after hours. Oh, and by the way, Mo's best friend, he went to high school with this guy, CZ, got sentenced to 4 months in prison. I'm just kidding. Mo did not go to high school. But it was funny because when SBF was going down, CZ was bragging about being the adult in the room.
Yeah.
I guess the adult in that room still goes to jail for 4 months. Guys, crypto feels a lot like real estate back in 2006, 7, and 8, feels a lot like stocks back in 2000 in terms of all the yuckiness, all the fraud, all the disgust out there. There's so much fraud around crypto. Guys, crypto, in theory, it's like communism. In theory, it's a great idea. But guys, in practicality, I just don't see how it works in its current form. You're going to tell a government, hey, instead of your fiat currency, we're going to create all these random coins. Some guy's going to make a coin based on his dog, and people are going to love it and replace it instead of currency. But yet the very people who value it based on the fiat currency they're trying to replace. I don't know. I don't get it.
There's another one today. Tim sent us this one. Just more, maybe this had to do with the market pulling back a little bit. U.S. consumer confidence lowest level since July of 2022.
Yeah, consumer confidence goes up and down, up and down. I feel like it goes up and down based on where the market's at. But to see it at near all-time highs, that's kind of interesting. We still have very low unemployment rate. We still have job growth going on. Doesn't feel like much. And guys, we're not trying to be fudsters here. Remember, in the markets, in the economy, there are tens of thousands, hundreds of thousands of data points. The question is, how do you sift through them and focus on nothing? Remember, at the end of the day, this is what the world has looked like since 1955, and this is what the S&P has done. And by the way, guys, this is a log chart. For those who don't know what this means, this is not showing the true growth. If this was a normal chart, it would look like this. Okay? So this is basically 10x, 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 or something like that. The bottom line is, guys, all these terrible things have happened. Korean War, JFK killed, Cuban Missile Crisis, Vietnam War, stagflation, Nixon resigns, 18% mortgages, Black Monday. That was a 27% drop in stocks that day. Savings and loan crisis, Gulf War I, Gulf War II, dot-com bubble, September. Isn't that funny they have Y2K in here? Remember that? Yep. That was the biggest scam of all time.
Oh, it was the biggest scam. I remember, I thought that they were like, it's going to smell different outside. So I went out at midnight as like a child. I was like, yeah, it doesn't smell different. I'm going to bed.
No, yeah, it didn't smell much different. COVID, Brexit. Guys, we have all of these things. By the way, Brexit's the best because, Mo, what's that show? Hardballers? No, Ballers. The one with The Rock, who's literally the worst actor ever. But somebody was like, hey, you think they're gonna expand London? He goes, with Brexit? No chance. It's so cringe. But that's the way people think. People out there want you to believe that all these things matter. They don't matter. What matters is buying good companies at good prices, understanding fundamentals so you can make that decision. But most importantly is having the emotional ability that when the stocks you buy go down, to reevaluate and still buy more because the fundamentals are the same. if you're going to get in and out of investments all the time, you're not going to do well.
Nope.
You're not going to do well. It's just proven time and time again that sitting and waiting is how you make the most money. Yes, understanding the fundamentals is super important. That's 10 or 20% of it. That's the easier part. Our software tools help you with the fundamentals. But it's all about being able to buy a company, sit on it, wait, and just watch it compound. Or buy ETFs and sit there and wait and watch it compound. That's what's most important. That's what Mo and I spend our entire life doing, is training ourselves to be patient. It's hard, but there are so many situations that prove that bad news doesn't last forever, good news doesn't last forever. Now, guys, click the link below if you want to be able to handle your emotions better. There are thousands of people in our community right up here that are there to help each other with the emotional aspect of investing. If you make less emotional decisions, you will do better in investing. That's an absolute fact. That's been proven time and time again. Now we have a wait list. Today, we sold out all our spots. But click the link below because there's still a way to be shortcutted into the software today. There's just some simple things you need to do. So if you actually want access today and not join the wait list, click the link below, sign up. After you sign up, it'll give you instructions on getting in within a few hours. That's an absolute guarantee because we want the serious investor in there. That's why we're limiting our spots. That's why for the wait list, to skip it, you got to show us how serious you are. So click that link. It's $7 for 7 days. I assure you that if you use it to help you with your emotions, you'll get better in investing. And when it comes to a company like Tesla, nothing is more important about understanding emotions than this. $4.14 a share. The emotions that I had being told I was a moron, I didn't get it. Kathy Wood has a fund. You don't. All these things were happening up here. And guess what I did? Okay. Now the stock is at 183 after hitting a low of like 138 back. Oh, wow. Literally last week. Isn't that funny, Mo?
Yep.
Last week it was at 138.8. Literally a week ago. Now it's at 183. Guys, I still think it's a car company. I actually have Tesla in my too hard pile, I think, because even if it was $50 today, I don't understand the component of the car. The car business just sucks in general. But then adding this tech component, which I think is there. I don't want people to hear me say that there's no tech component. I just don't think it's a tech company. There's a big difference. There is a tech component. It is not a tech company yet. That's the hard part for me. Professor Aswath, who we had on the show, a friend of the channel, he values a Tesla at 180. I don't. I'm not the person to evaluate it, but if you know better than me, which a lot of people out there do, it's about understanding what you understand. It's not about mimicking what people in the markets do. Guys, AMD, Amazon, and Starbucks are reporting here in minutes. We're going to provide you with the results, but tomorrow at 6 a.m., our video on the main channel will be going out where we do our more thorough analysis on those three companies. We're going to evaluate it. AMD is obviously wanted for the chips and the AI. Amazon, because it's the everything company. And Starbucks, because if it wasn't for Mo's fiance, Nicole, Starbucks would be out of business. Is that correct, Mo?
Absolutely correct.
So what do you expect these companies to do, Mo?
Amazon.
Oh, we have it.
We do?
So Mo, make your guess. And then we will sit there and get the results.
Amazon, I'm expecting beat. Starbucks, I'm expecting loss on earnings because of all of the miss. And then I'm expecting AMD. AMD will just say AI and they'll beat.
They're going to beat. Okay, so do you have all three, Tim? All right, guys, Starbucks and Amazon reported. Starbucks missed. They missed big, Mo. 68 cents per share in profit versus 80 cents expected. 8.6 billion in revenue versus 9.12. Guys, I own Starbucks. Don't ever buy a company because something the internet does. And they are down 9%. Woo! Yeah. There we go, baby.
There we go. It's about damn time. I'm not surprised with this one.
I love it. This is great. This is great. I love it. I absolutely love it. I get to buy a great company at a great price because I think this is a short-term problem for Starbucks, and I hope that short-term lasts a year and they keep disappointing and the stock falls further. This is a company that was at $126 a share back in 2021, and it hasn't been there since. That's almost 3 years now of just meandering around. Oh, wow, this is great. This is great. Analyst estimates are calling for $4.20 this year, almost doubling in the next 3 or 4 years. If this happens, guys, You could buy this company at 10 times earnings for 4 years from now, which is still, it's still 4 years from now. But the point is 10 times. I don't know. I look at this going, this is great for me.
Yep.
This is great for me. Revenue growth, high single digits, low double digit revenue growth, down 8.5% still. Now let's look at Amazon. What's Amazon doing? It should be up a ton.
Let's see.
Amazon is up 3.5%.
Amazon increased net sales increased 13% in the quarter.
13%. Amazon's killing it. I want to see the breakdown of how they're doing on their most important business, the retail side. The biggest revenue generator for them is the retail side. Obviously, AWS is very important too, high margin. But Mo, can you bring that stuff up? Also, I want to see Starbucks. That's a big miss on revenue. So I want to sit there and see what they did.
My speculation here on revenue for Starbucks has to do with all the boycotts that are happening because of what's going on in Israel and Iran, everything over there. I think that's what's going on there with the revenue. I'm excited to see what they're going to say in their call later today. Yeah. Almost said
can you pull up their press release while I talk a little bit more about Amazon?
Yep.
Man, Amazon up $6 now, 3.43%. Guys, Amazon, exciting company. I actually put Amazon in the too hard pile sometimes for myself and look at the value, look at the volatility of Amazon. It was at $101 a share last year in May. It hit this low. This low right here was $81 a share back in December of 2022, right at the end of that bear market we had for 1 year. And for those of you who don't understand what a bear market is, it's when stocks are down. I know we haven't felt that in a billion years, but they do happen every so often. But $81 a share. Your money is over doubled if you had the gumption and balls to buy it back then. And guys, that's what that takes. They were talking about the CEO being fired, talking about all these things. They're missing on all these things. And now the news is awesome. The news is incredible. Anything on Starbucks?
I'm still trying to find it. I have a feeling they're going to say a lot on their call.
I imagine they would too, but what are same-store sales? Was it down? I imagine it was down.
I'm going to look for that.
It had to have been down. Anything on AMD yet? Okay, so we have AMD. Here it is. Guys, AMD just pulled a Palantir beat. 62 cents versus 61 cents, 5.5 billion versus an estimated 5.45. Let's pull up AMD's nuts, and the stock is down 3% after hours. Wow. Was not expecting that. The stock's all-time high was 227 a little bit over a month and a half ago. So 227 down to 151 in 6 weeks. What is that? That's $76 on 227. That is a little over 33%. Call it 34% drop in value. Guys, 6 weeks, 34% drop in value. Remember this. This stuff happens. Amazon was $81 in December of 2022, a year and 5 months ago, 17 months ago. And now it's up over 100%, 125%. These things happen. Mo, what were you saying?
If you want to go back to Starbucks, these are actually amazing numbers. Global comparable sales declined 4%. North American and U.S. sales down 3%, same store sales. International sales declined 6%.
Wow.
Wow is right. Company opened 364 net new stores in the second quarter, ending with a total of 38,951 total stores. Are
they obviously they have to be saying something negative in the earnings release?
Yeah, there's a lot of negatives going on here.
Well, let's see. What are they saying? What are they saying? I don't mean like negatives, like the numbers wise. Like, are they explaining what it is? Are they blaming the protests?
Nothing that I'm seeing yet. No.
Okay, interesting.
I think this will be something that they say on their call.
Okay.
So that they have the opportunity to explain it.
So guys, if you're interested, by all means, listen to the call. It's a great way to learn. If you're in the community, have a conversation, because Starbucks is a stock I own and I'm rooting for it to fall. So let's go Starbucks. Guys, thank you for your time. Remember, click the link below, join the community. You can skip ahead by following the instructions. And don't forget tomorrow's 6 a.m. video Eastern time on these companies more in depth. Take care.